All right, you guys had your break. Nice little detour before going to the final rally of the semester. Hopefully you're a little bit relaxed, although was told before class that my exam is starting to stress everybody out. Is that the case? Now, I would like to remind you that under the course syllabus policies, there is no requirement that you have to sit for every exam to be able to opt out of the final exam. If you decide to just take Friday off, then at most I'll count off as 60 points. So it's always an option for you. Just, just throwing it out there. Just throwing it out there. I'm not encouraging it. I'm just kind of giving an option. All right, quick announcement. As a big note, there's been some discussion about it, but we do have topics assigned. Okay, so everybody can kind of see what their groups topics are assigned. We still do not have dates for the final presentation week. So remember, we are presenting on Wednesday and Friday during next week, so week 15. That is also first come, first serve. So if you have a strong preference about when your group is presenting, or probably more importantly, if there's a date that you cannot present, please let me know ASAP, because that's happened in the past, is that people have said, not let me know until the week of the presentation. It says, oh, Dr. Barnes, we won't be here on that date, and we can't actually present on that date, or can't present on that date. And then I have to rejigger the whole schedule. So first priority, make sure that you let me know if you can't present on a certain date, if you're not going to be available on a certain date. Otherwise, we'll just make sure that we'll plan on whenever people have preference for when they're going to present on. So yeah, see those lovely topics right there. And I just realized that I put names on the recording, so now I'm cyberbullying again. Goodness gracious. All right. I'm going to get away from that. All right. I'm just going to close that window so we don't have to worry about that. All right. Let's get into it. Study guide stuff. So obviously there's going to be 12 questions and 2 problems, as they've been consistently on the previous exams. Just a quick breakdown of the multiple choice questions. There will be 1 question from the Code of Professional Conduct, which we talked about in class. I'll go over that, 1 multiple choice question on that. Then there will be 2-ish questions on each of the lectures that we had after that. When I say 2-ish, I mean that's for one of them. For one of the lectures, I'm only going to do 1 multiple choice questions, because that would be 13 questions otherwise. But roughly 2 questions for each of the rest of the chapters. So that's chapter 10, chapter 11, chapter 12, chapter 13, chapters 14 and 15 combined. That was the one that I was sick the last Monday that I had you all watch the recording for. And then chapter 16, which you covered on Wednesday. Problems will come, 1 problem will come from somewhere between chapters 10 and 13, which will be the control problem. And then the other problem will cover a boundary of areas anywhere from chapters 10 to 16. Okay. Let's go ahead and talk really quickly about some things that's really important from the previous exams. So right off, management assertions. These are going to be more critical than they have been in previous semester or previous exams. Obviously, they were really important in other exams, but now we're talking about actual application. I would like to remind everybody, because this tends to get conflated somehow, and everybody gets a little bit thrown off. When we talk about primary assertions, there is a very simple rule for primary assertions, okay? So remember I talked about confirmations, and when I use a confirmation for accounts receivable, the primary assertion is one thing, but when I talk about it's accounts payable, it's a different thing. So everybody loosely remember that discussion. So the rule is very basic, okay? If we're talking about assets or revenues, our primary assertion is generally going to be existence occurrence, okay? Because that's going to be something that we're concerned about our client overrepresenting. Talking about liabilities, equity, or expenses, our primary assertion is generally going to be completeness. Because again, that's something where we're concerned about them underrepresenting or underreporting. Okay, that's it. That's all that you really need to read into that. Okay, so if there's something comes up that has to do with that, please just keep that rule of thumb in mind. It's not meant to be difficult, but everybody kind of gets a little bit flustered when I said, all right, we're talking about accounts receivable confirmations. What's our primary assertion? It's like, BAP, I don't know, whatever the letters are. Do not get worried about too much. If it's an asset, then we're talking about existence occurrence. If it's a liability, we're talking about completeness. That does not mean we can't test other assertions, but for primary assertions, those are going to be our primary concern areas. All right. Down on types of evidence audit test, you may want to refresh yourself on this, because we do a lot of testing within these few chapters to make sure that you're familiar with all these types of evidence. Particularly, make sure you review what the assertions that can be tested and what their reliability is. Again, that's not something I want you to hold on to, but make sure you just review that and have some familiarity with it. Also, something that's going to be very important for this exam is this segregation of duties right here. Everybody remember that from 367 from AIS? You know, the picture of the car, beep beep. Yeah, I don't know why I said that. I've never said beep beep before in my life. Yeah, I give you guys that little extra for today. Yeah, all right. So, custody, authorization, recording. Make sure you understand the separation of those responsibilities. All right, code of professional conduct. I'm going to cover this stuff really quickly. There's a very, very low chance that I will ask a question in this area, but I want to make sure I answer these questions. Contingent fees, what are the exception? That's usually when there's legal proceedings or compilations for a third party. Commissions or referral fees when they're permissible, tax or non-ETA services. And access creditable rule, what's the example that Becker, the AICP, loves to use? That's failure to return client records upon request, okay? So again, very low likelihood that I'll ask a question in this area. The reason I say that is 9 times out of 10, not every single time, but 9 times out of 10, I've been given an exam in this area. It's come from one section, and that's the independence rules, okay? The stuff that's in this area right here. So obviously all this stuff is really important, but let me tell you the stuff that's most important. Please make sure you know the rules for covered members. There are 6 guidelines in there. Am I going to ask you to list those out? No. Okay. There's only one multiple choice question on this, so you don't need to list out the covered members, but you do need to be familiar with what they are. Also, please remember that there are certain guidelines where people have to follow rules as if they were covered members. Okay. That's immediate family members or close relatives with a direct or material indirect financial interest. Okay. So please make sure you're clear on that. There was an example in the practice exam of this type of question, so that's kind of question that you would look at to look at. Make sure you follow this. The only reason I emphasize this so much is the independence rule is really, really important from the AICPA perspective, and given that most of you are going to be becoming CPAs, it's probably a good one to know. All right. Chapter 10. So obviously, you know the 5 steps to revenue recognition. That's something you should have remembered from 302. It's just a good guideline. Is there a chance I ask a question on this? There's always a chance. There's not a high likelihood chance, but I would expect you to be able to identify those 5 steps. If I do ask a question, it'll be multiple choice. I'm not going to ask you to list these out in a problem. Okay. Fraud risk and revenue recognition, be able to describe each one. This is a really important one because this is one that we are going to encounter a lot. My favorite ones to ask questions on: channel stuffing and bill and hold sales. So all 4 of those are really important, but I would expect you to be able to define very clearly channel stuffing and bill and hold sales. Those are really important. Key segregation of duties. This is obviously really critical for all the chapters because we talked about actual application of segregation of duties in a lot of scenarios. For chapters 10 and 11, you should probably know which ones are being segregated in a given control and how it can prevent a possible error or fraud. We walked through examples of these for several of the chapters. So anytime that we did that, I would strongly recommend that you go back through the slides and make sure you understand how the controls are being separated or how the duties are being separated out in those given scenarios. Some of them are misnomers, like one was an example of the separation of general ledger and the subsidiary ledger accounting functions. Those are both reporting responsibilities. Don't worry about those. I will not ask those questions, but anything that's a separation of custody, authorization, or reporting, that's fair game, okay? Anything that we talked about. All right. Obviously, I'm going to harp on this one a lot. This comes up a lot. Control activities and appropriate test of controls. I gave you guys 6 tables to talk about to review on your own. That actually was reflected in the practice exam, and it's going to be almost identical on the exam itself. You do need to have knowledge of this. Particularly, you need to understand the risks, the assertions, the controls, and the test of controls that are appropriate in those areas. Okay. Now, you may be asking, you didn't ask us about test of controls and the problem. Will you ask about that on the exam? I won't ask that specifically in the problem area. The questions I'm going to ask you on the practice or in the exam are almost identical in format to the practice exam. Okay. The only changes is going to be is like which assertions, which risk areas, and which controls. But keep in mind that there's likely going to be areas on the multiple choice questions I will ask you to identify appropriate tests of control. So you do need to be responsible for understanding all 4 areas. Examples of substantive test of details of revenues. Remember, for all the chapters, I kind of went through a pretty similar scheme. I gave you either the assertion or I gave you the test. and you had to identify the other one. So I think for chapters 10 and 11, I gave you the assertion, and then I gave you an example of a substantive procedure that you would test. And then I flipped the script for the rest of the chapters. I gave you the test, and you had to identify the assertion. Be familiar with both. That was kind of just trying to lean into the idea that you do need to be able to identify which assertion is appropriate or which test is appropriate given an assertion. Confirmations. There's a lot of talk confirmations in this section. I would know all this stuff right here. Okay. I particularly note something that students tend to kind of punt in the previous years is when I highlight all this and I say no, sorry, when I highlight all this and say no all this, some students say this one's not important. Okay, and so please make sure you check all of it. I would specifically make sure that you understand the alternate procedures. The reason that's important is because if confirmations are not returned, that does not mean there's an exception. There are opportunities for us to gain assurance in other ways, so you should be familiar with what those other ways are. Okay. All right, chapter 11, difference between expense categories. Know the difference between those. Your accountants, you should all know the difference between period cost and product cost and systematic allocation by now, but make sure you have a loose understanding of that. I gave you detailed definitions, so read through those definitions and make sure you can understand why those are different, and I gave you examples of each. Obviously, whole control thing again, still important. I'm not going to reiterate this point except to say that it's still important. So this is the second of our 2 series of tables. So we had 2 tables for chapter 10, 2 tables for chapter 11, then 1 table each for chapters 12 and 13. So this is our second series of 2 tables. Questions will come from those tables. Same rule for the substantive test of details of revenues. Oh my gosh, this typos existed forever. Oh my gosh, thought I'd fix that. It's the dangers of copy and paste. So tested details of purchases. So that's happened. So interesting story. When I did when I created the chapter 11 lecture, this like 8 years ago, I copy and pasted a lot of my stuff and I basically kind of just tried to mirror it and tried to, phone it in. And I've been correcting typos for the past 8 years. Okay. This may be the last existing typo that's existed since I created that. So you guys are witnessing history right now. All right. I want you to take out a selfie, make a no one right here. We're witnessing history. All right. So yeah, I'm gonna fix that. My gosh, I can't believe that still existed. Yeah, well, okay. Obviously, it's supposed to be tested details over purchases. What does that mean? Again, those were the example I gave you the assertion, and you had to identify what was an appropriate test or an appropriate test in that area or appropriate concern in that area. Same thing. Identify based on test. You want to make sure you identify the appropriate assertion. Search for unreported liabilities. Does everybody remember doing that? Okay, so we actually did an earthware clothier's homework assignment. Make sure you're familiar with what we were trying to accomplish in there. Make sure you understand what are the scenarios where an unrecorded liability may exist. In other words, not that an unrecorded liability does exist. We can never prove that as an auditor, but the scenario where we might think this is suspicious, we need to investigate this further. So where a red flag exists, okay? Make sure you understand that. Chapter 12. Chapter 12, there really wasn't much to that. I kind of told you that this was a light one. There's likely going to be just a few questions in this area. Some things that you should probably note. Obviously, the payroll control risks are really, really important. There's a full table on that, so make sure you take a look at the control stuff. Also, substantive tested details over payroll and HR. This is just like I said before. I gave you a whole bunch of different assertions, or sorry, I gave you a bunch of tests and you had to identify the assertion. That's going to be the kind of the dynamic that you're going to see with substantive procedures is you do need to be able to understand the assertion relative to the test or the test relative to the assertion, vice versa. Inventory is very important. So let's talk about chapter 13. Obviously, the last of the control tables is going to be very important. This is where we talked about that. And I do want to make a note of this right here. So I told you to look at 6 tables, okay? And they were paired series of tables. There was 2 tables in chapter 10, 2 tables in chapter 11, and then there was a table each in chapter 12 and 13. The reason I call them paired series is the question that will be in the exam, the problem that will be in the exam will either cover the tables from chapter 10, it will cover the tables from chapter 11, and the tables from chapter 12 and 13 combined, okay? So we'll talk about that when we get to the practice exam, but everybody might be saying, well, he asked about purchasing on the practice exam, so he won't ask about purchasing again. That actually was true about 5 years ago until somebody pointed out, oh, I knew you were going to do revenue, Dr. Barnes, because you did purchasing this time. And I said, oh, okay. Well, now we're just going to flip the script. So what is the chance that I'll ask purchasing? It's about 33%. Okay. There's about 33% chance of loss of revenue. You can thank that individual for spoiling it for you all, okay? You can say, we didn't need to study purchasing. No, it's no longer the case anymore. I have definitely asked purchasing and then done purchasing again on the exam. So you do need to study all those tables, all right? That's not fair, Dr. Barnes. Somebody spoiled it for us. Yeah, you're just learning more. Think about it this way. It's a learning opportunity for everybody. All right. Substance test the detail of inventory. I've already mentioned this. Make sure you know the test and the related assertion. Inventory counts. We talked about how to go to detail in inventory counts. This is very important to be very familiar with this. So make sure you know the auditor planning steps. There was actually a slide in the chapter 13 slides that talk about the preparation procedures for auditors in an inventory count. And then we talked about how we tested each of the assertions in an inventory count. Last but not least, I don't know what it is, but in the past, I've talked about how everybody needs to. So again, I'm going to highlight the areas that I think are really important in this chapter. When I get to this last line, everybody seems to punt that last line. I have definitely asked questions from that section. So it was one of the last slides in the chapter 13 module. We spent like a good 5 minutes talking about that last slide by itself. So please make sure you spend some time reviewing that information as well. All right, chapter 14. So chapter 14, 15, and 16, there was some concept about inherent risk, about why inherent risk was low in some of these certain areas. You do need to be able to explain why. For this one, it's not particularly difficult. For property, plant, and equipment, it's not particularly difficult to understand simply because property, plant, and equipment is very easy to understand. It's conceptualized. It's one of the very first things you learned in your financial accounting class, okay? That being said, I also talked about inherent risk for, sorry, when I said property plant, meant P&E, or prepaid expenses. So inherent risk is low for prepaid expenses. But then I talked about property, plant, and equipment. Then we talked about, long-term debt, talked about equity, and we talked about cash, and we talked about investments. All of those things had differing levels of inherent risk, and we talked about them in length, particularly the ones for property, plant, and equipment, debt, and equity. What was the relative level of inherent risk? And the answer in that one, remember, it was talked about, it depends. What was the reason for it depends? Is it really depends on the nature of the instrument that we were looking at in those particular scenarios. So even though this one's a gimme, if I say what's inherent risk of prepaid expenses, you can say low. You do need to be able to explain why it is, and why, if you say it depends in a certain scenario, why it depends or what it depends on. Fixed asset roll forward. Remember we talked about that for fixed assets. That's how we test it. So how does this testing work? Basically, the idea is we know what the beginning balance is because we audited it in the previous year. At least that's the assumption. So we're trying to get to the ending balance and prove that number is correct. So all we have to do is audit the changes during the period. What are those changes? They're listed right here: acquisition, disposal, depreciation, leasing. Please make sure you know all 4 of those items because all 4 of those changes are important to note, okay? Now, we won't talk about specifically what are the required tests for that. It's actually pretty easy. All you're just doing is looking at documentation and reviewing the asset additions, or asset additions or subtractions, whatever it might be, asset addition disposals. But for the most part, those are the 4 areas we need to focus on. Chapter 15. Okay, long-term debt. That's where you're actually going to see it depends. That's where we see that word depends. Make sure you can explain why that is. So we talked about property, plant, and equipment. We also talked about this in long-term debt and in stockholders' equity. Control risk, generally it's more efficient to rely on a substantive strategy. So remember, that was the time when we started celebrating and saying substantive strategy. Why is a substantive strategy more important in this area? It's very basic. Generally speaking, there are fewer transactions than there are controls in the area. So testing the transactions individually would be more efficient than testing the controls. That is not to say controls are not important, just means that we as auditors would rather test one than the other, and we have time as a premium, so let's just focus on the tests and transactions themselves. Sometimes we may be required to test controls. If that's the case, we're going to focus on authorization and recording in this area. As far as stockholders' equity goes, the same holds true, but we talk about test of controls in there. True segregation of duties is very important with respect to stockholders' equity. We do have to actually test to make sure that there's proper custody authorization recording over the transactions in those areas. Auditing dividends. This one comes up, and I think so. It was actually on the practice exam. It's a little confusing. So I think I talked about this during the lecture, and if I didn't, I apologize. So I want to reiterate this point. So the testing, when an independent dividend distribution agent is used, we have confirmation and agreement. Okay, so we do actually a confirmation test. This is to actually test completeness because we're talking about a equity item. And agreement is testing VAA. When an independent dispersing agent is not used, we recompute the authorized dividend and trace the disbursement or the payable. So recompute is VAA, tracing is completeness. Ultimately, all I'm trying to get at when I ask you this question is, what are the assertions that we're trying to get at? Okay, what are the assertions that we're trying to convey? And it's completeness and VAA when we're talking about testing dividends. That's the most important thing to take away from this particular series of tests. If that comes up, that's what you need to be anchored on. If you kind of come up with a different series of wording, if you come up with a different test, but they still test completeness and VAA, I would still count that as a correct answer. Unless, of course, it's some test that doesn't really exist, but you make up a test to say, I'm going to go lift a car outside, and that would test completeness. I'm going to say that's a good thought, but that doesn't actually test completeness, okay? And I don't know why I came up with lifting a car outside. That was the first thing that came to my head, which I don't know where my mind is at, you know? Anyway. All right. Finally, in this chapter, most auditing takes place to the balance sheet. What does that mean? Well, that basically means that we test primarily through balance sheet accounts. We can do ancillary test of income statements, but usually they're represented through their offsetting balance sheet entries. So remember we talked about sales? What was one of the areas that we focused on for revenue testing? Was it the sales account or was it accounts receivable? Accounts receivable, okay, and the associated cash disbursement, okay? Same thing for cost of goods sold. We tend to focus on accounts payable and the associated cash disbursements, okay? There are ways that we can test income statement accounts directly, but they usually occur via analytical procedures for ones that we can actually develop expectations for. So like interest expense, interest revenue, things along those lines, okay? So most of our testing takes place to the balance sheet account. If we have income statement testing, usually those are going to be tested indirectly. Chapter 16. Please make sure you are very familiar with the testing for bank reconciliation. So make sure you know what the documents are needed and what the purpose of gathering those documents are. Obviously, if you're going to test a bank reconciliation, you're going to get the bank reconciliation. That's a no-brainer. The bank confirmation, the standard bank confirmation, that's to verify the big bank balance, and the cutoff bank statement, that's to verify anything that changes during the period. Also, you do not need to know what these are, but you do need to know what the 3 additional tests are. Just make sure you have their names down, okay? Just for good note. That's when fraud is suspected or when we don't believe the controls are not effective in that area. Let's see. One area that's really important we talk about the important assertions related to controls over testing investments. There were like 3 assertions that I talked about that were really, really critical in this area. So existence occurrence, really, really important. Valuation, allocation, accuracy, really important. And classification, which I think I said presentation and classification, but classification was the primary there. Please remember those. You might want to review the slides in those areas for examples of why those are important and how we test those. So that was a really important takeaway of investments. Also, spend some time looking at segregation of duties over the investment functions. We had a slide set aside just for that. Just like for equity, true segregation of duties is really important for investments as well, okay? We don't want to have unauthorized transactions in that area. All right, last thing to note, we talked about it already, but the controls tables are obviously very important. I would say that they probably make up, well, let's see, I can tell you right now, 12 points of the exam for sure, and I would expect anywhere from 3 to another 6 points. So if we're talking 18 points of the exam, they could be close to a third of the exam. As far as the points contribution so this is not something you should take lightly. You should know all those tables really well. Again, I'm not saying you have to memorize everything that's in the table. That's not what my takeaway is. My goal is that you can look at the table, you can look at an assertion, you can come up with what is a risk in that area that related to that assertion. That should be fairly straightforward by this point. You can tell me what an example of a control in that area is, and you can give me an example for a test of control. Also very important, if you do that, you do need to make sure that everything is aligned properly. So if you tell me control in this area would be segregation of duties, then you need to give me an appropriate test for segregation of duties. You can't just come up willy-nilly with any test off the top of your head. If you say confirmation, I'll throw something at you, okay? All right. And then the assignments that we did, search for unrecorded liabilities, audit of cash, please make sure you review those. Those were really important reinforcement tools for some of the concepts that we talked about in those chapters. All right. Any questions on the study guide? Fantastic. I did a wonderful job. All right. Go ahead and go to the exam, the practice exam. Someday I'm going to make a mistake. I'm going to pull up the actual exam and just start going through it, and everybody's going to be quiet, and I'm going to realize my mistake, and I'm going to have to rewrite the entire exam. That'd be a tragedy, wouldn't it? Yeah, it'd be a real tragedy, Dr. Barnes. Yeah. Terry Ocatho works in the Kansas City office of HJC. Terry's the manager of annual financial state engagement for Isaac Eisen Industries Incorporated, or 4I, publicly traded company in the United States, located in Kansas City. With respect to the independence requirements of the ACCT Code of Professional Conduct, which of the following situations would most likely impair Terry's independence on the 4I engagement? Terry is a member of the same country club as several executives on the 4I management team. What do you guys think? Yes or no? Impair or not impair? Not impair. That will not impair independence. 4I still owes a material amount of fees to HJC for an interim review engagement conducted 6 months ago. What do you guys think? Impair or not impair? No. The threshold for that has to be a year. Okay, it has to be over a year old in order for it to become an independence issue. 4I's management team threatened to sue HJC for its conduct on the prior year's financial statement audit, but has not filed the necessary paperwork to commence litigation. Does that impair independence? Yes or no? Yes, it does. Any actual or threatened litigation will impair independence, and you cannot continue on as an audit or the audit engagement. So C is our answer. And for that reason, D cannot be the answer. But he's waiting for all of the above to pop up. Everybody's just waiting. It's it's coming. It's 1 out of 4 tries. 1 out of 4 tries, guys. All right. Terry's primary point of contact for 4I audit is Controller Davis Templeton. Terry believes Davis may be fraudulently overstating 4I's revenue by recording fictitious sales. You just can't trust people named Templeton. All right, which of the following audit procedures would be most likely to use to identify this situation? All right, so overstating 4I's revenue, what assertion is being violated here? Existence occurrence, okay, existence occurrence. So we're looking for a test of existence occurrence. All right, there's actually 2 tests of existence occurrence here. You will notice that it actually says vouching in 2 different areas, okay? The question is, do we want to select a sample of invoices and vouch to the related shipping documents? Do we want to select a sample of entries in the journal and vouch to the related sales invoices? That's an interesting question. Which one's going to give us more proof about existence? The shipping documents, for sure, because they can actually falsify the sales invoices, but they can't falsify actually receiving merchandise. I guess could falsify it, but if we could actually vouch to the documents and determine that those items were actually received, it does give us proof about existence occurrence or lack thereof. So A is our answer. All right. As part of her confirmations testing over 4I's accounts receivable, Terry did not receive responses to either initial or second requests for several of 4I's customers. So meaning Terry used positive confirmations, which of the following would not be an appropriate alternative procedure for Terry to gain assurance regarding the customer's accounts receivable balance. Okay, so let's go ahead and do one quick thing. Okay, remember I was telling you on that slide that people tend not to focus enough on that last slide in the chapter 10. This is actually verbatim from last slide. What's verbatim? B, C, and D are listed on that slide, okay? But let's say you couldn't remember that. When we talk about confirmation, what phase of testing are we in? Always when we talk about confirmation, we are in the substantive phase of testing, okay? We are in the last phase of testing, okay? Would it make sense to go examine controls over accounts receivable if we've already tested controls? Or if we've already bypassed that section? No. So examination of controls over accounts receivable would not be sufficient in this area. Therefore, we can say A is not our answer. Part of her controls testing over 4I's purchasing process, Terry's evaluating segregation duties of 4I's areas of purchasing, functional areas of purchasing, which the following describes a weakness in 4I's accounts payable procedures. So segregation duties, custody authorization recordings, that's what we're looking. We're looking for both of those together. Accounts payable is what type of responsibility? So recording responsibility. And then this accounts payable manager is issuing purchase orders. Issuing purchase orders is authorization, okay? A says the person who's responsible for recording can also authorize purchase orders. Do we see a problem there? Yes, okay, A is our answer. Question number 5, to determine whether 4I's accounts payable are complete, Terry performs a list to verify all merchandise received is also recorded. Population for documents of this test consists of all what? Did anybody notice this is very similar to a question that we did for homework? Yeah, it's actually almost identical to a question we did for homework. That was not intentional. I actually just kind of was use it for inspiration, and then I realized, oh wow, exact same question, except for I used Terry Ocatho instead of whoever the example is. So what was the question? What was the answer to the question in the homework? It's receiving reports. Okay, if we're trying to determine information for receiving, our source documents are going to be the receiving reports, and then we actually try to make sure that everything's received is also recorded. Okay, So it's trying to actually identify source documents. So again, we start at the source, so we move up to the record. That's the completeness test. Terry is testing controls over 4I's payroll process. Which of the management or one of the management assertions she is highly concerned with existence occurrence? Which of the following represents a possible misstatement related to management assertion of existence occurrence? All right, so payroll. Let's just think about this. Before you even look at the answers, what are you looking for? Okay. So existence occurrence, what would be a violation of existence occurrence in the payroll process? Somebody getting paid for work that they didn't do? Or somebody who doesn't work for the company getting paid, something along those lines. Okay. So we have a general idea. Let's look at the answers. Employee compensation and payroll deductions computed incorrectly. Nope. What's that a violation of? Like, to give you a hint, it's one of the assertions. Or I'll give you another hint. It starts with a V. VAA. All right. Employee work performed but not recorded. Is that a violation of existence occurrence? Not recorded is a big clue. That's a violation of completeness. Yes. Payments made to employees at rates in excess of authorized amounts. Wow, we're really close on that one, but we're not saying people are not the people paid when they shouldn't be. We're talking about they're getting paid for improper amounts. What do we think of with violation when things are not correct, when they're calculated incorrectly? That's a VAA violation. Payments made to valid employees who have not worked. We only have one left, and I hope this is it, but this is it, okay? Valid employees who have not worked, they're getting paid for work they didn't do. That's definitely an existence occurrence violation. Okay. 4i CFO Davis Templeton has tried to assure Terry about the adequacy of 4i's controls over payroll by explaining how individuals who are responsible for approving timesheets are unable to employ employee hours into 4i's payroll system. What's Templeton describing there? Everybody at this point, they should read that first sentence right now. It says, I know exactly what Dr. Barnes was talking about. He's talking about segregation of duties. Yes, okay. So who are responsible for approving timesheets, authorization, unable input hours worked into the 4I's payroll system. Recording. Terry is satisfied this control would help address the risk of misstatement to the existence occurrence. However, she believes that she needs to test this control, which the following would be an appropriate test of this control. So this is asking, what do we do to test segregation of duties? Okay. So is that a fair question? I hope so, because I put it on a practice exam. All right. All right. Check the numerical sequence of timesheets. Will that actually test segregation of duties? No. Okay. Segregation of duties is personnel responsibilities. Looking at documents is not going to do that. Inspect timesheets presented for approval by the supervisor. Okay. Well, we're talking about one thing, but we're not it's looking for approval, but this is just saying if does approval exist. We're trying to make sure is approval separated from recording. Okay. So this only checks half of that. Observe and evaluate proper segregation of duties. So just a quick question. If you're trying to test segregation of duties, is observing and evaluating segregation of duties a good first step? Probably so. That's why C is our answer. Perform a search for unrecorded liabilities to accrued payroll obligations. That one's obviously nowhere even close to the ballpark. I'll be honest, when I wrote this test question, I was just kind of like, I got to come up with something. I got to come up with something. I don't even know if anybody actually picked that one, but if I did, kudos. All right. Kudos to me. All right. Terry plans on observing 4I's year-end inventory count. Which of the following statements is correct with regard to the inventory count? Let's just go through them. Because the inventory count is taking place at year-end, Terry's observation of the inventory count is not considered a test of controls. Is that a correct statement? No, we consider this kind of a dual-purpose test because we can actually test multiple assertions and multiple phases at the same time. Terry should ensure that no inventory movement or production will take place during the account. That is a very accurate statement, and that is our answer, but let's go through the rest. Since the client is performing the inventory count, Terry does not have a responsibility to evaluate the instructions and procedures for the account. That is a way that you can make sure that the count goes off the rails if you don't evaluate the instructions for clarity and make sure everybody is clear and detailed on the instructions and know what their responsibilities are. Remember the little dog down there that says angry? Okay, that's what made me angry, is because my supervisor did not do that for me. Since the client has performed the inventory count, Terry does not need to perform test counts of her own. Technically speaking, you can make an argument for that, but what did we say the client count is? What do we do? What type of testing is being performed when we watch somebody do the counting on their own? That's observation, okay? When you perform test counts, what do we call that? Reperformance, okay? Which one gives us the higher levels of assurance? Reperformance. So that's why we want to do test counts, because we want a little bit higher reassurance or higher assurance in certain areas. Terry performed several audit tests during inventory count observations to address various management assertions related to inventory. Which of the following tests would best address the completeness assertion? Wow, this is a flashback to chapter 5. We did this all the way back in chapter 5. I even asked you a test question on it back in chapter 5. Okay, so it's sheet to floor, floor to sheet. Which is it? Floor to sheet. So completeness, what do we got? Floor to sheet. Okay, so let's think about this. The floor depicts what the items are on the currently warehouse floor, okay? So that represents a good source of information, okay? Then we're going to go compare that to the sheet, which is the system information, which is what's recorded. So we're going to source to record. We're moving bottom to top. Is that tracing? Yep, absolutely right. It's floor to sheet, B, okay? B is our answer. All right, Terry has noted that 4i appears to have implemented segregation duties over the transactions related to prepaid assets. Which one of the three principal incompatibility duties would be least relevant with respect to prepaid assets? This is one's checking to see how many people watched the video because I talked about this in the video. Which one was I talked about in the video was the least relevant? That say I'm going to call out the people who didn't actually email me and tell me what they did over Easter break. That was actually, by the way, just in case anybody knows, on Friday, I said anybody who was not in class and watched the video, they needed to email me. And I did have a few people email me. I mean, for those people who told me what they did over Easter break, thank you. It was actually entertaining to hear all about it. But for those of you who didn't, you're on my list. All right, which one of the three principal incompatible duties was least relevant to prepaid assets? That's custody. Why? Imagine you prepay your rent, okay? Then about halfway through the semester or halfway through the month, you're like, you know what? I'm tired of living here. I'm moving out. You go to your landlord and said, I'd like my rent back. What's your landlord going to say? Yeah, good luck with that. Good luck with that. Once the custody has been given up on most prepaid assets, it's gone, okay? Custody is not relevant. While HJC's audit of 4i's financial statements is thorough and comprehensive, Terry has noted that some of 4i's accounts are not tested directly. Rather, these accounts are tested part of other accounts or processes, usually tested indirectly through the use of analytical procedures. Which of the following accounts are most likely to be tested indirectly as described above? All right. So what are you looking for in this particular scenario? What type of account are we looking for here? So let's see, there's 5 types of accounts in accounting. We have assets, liabilities, stockholders' equity, revenues, and expenses. Which one of these would probably be the ones that we'd be looking for? Give you a hint, 2 of the categories are applicable here. Okay, I'll give you a further hint. It's revenues and expenses, but why? What do revenues and expenses have in common? They are the income statement. They're on the income statement. We're looking for stuff that's on the income statement. Remember, we talked about that just a little while ago. If it's on the income statement, we generally test those indirectly or as part of our balance sheet procedure testing. So what would be an example of an indirect test? Interest expense. Remember, we talked about how to do analytical procedures for interest expense. That's a perfect example of what's being described here. C is our answer. Other than comparing actual accounts balances to budget amounts, Terry's elected not to perform detailed substantive analytical procedures on 4i's cash account. Which of the following is most likely reason why Terry is not utilizing substantive analytical procedures over 4i's cash account? Because 4i's cash account is probably much higher than other balance sheet accounts. What do we think? Is cash usually the largest account on most people's balance sheets? Not by a long shot. It's not even close. It's usually one of the. It's a big account, but it's not the largest one. PP&E usually dwarfs it. Point 4, a cash account probably does not have a predictable relationship with other financial statement accounts. Is that a true statement? That is actually a very true statement. Why is that a true statement? Because sales can change accounts receivable, but so can purchases. And so can other discretionary expense or discretionary expenditures. So can other sources of revenue. We've got all these things that change cash, so we can't usually rely on one account to actually judge the direction of cash. Everybody remember the statement of cash flows? Remember that back from your accounting classes? Boy, wasn't that a monster. She had to check all the sources and disposals of cash. Yep, that's the exact same example right there. I'm not going to go through C and D because I just explained it. Yeah, all right. All right, let's get at it. So the question on the exam is going to be like this. It's going to look exactly in format. Okay, I think I changed the name of the people and the names of the company, but for the format, it's going to be exactly the same. I'm going to give you either it's going to be purchase transactions to start, or it's going to be revenue transactions, or it's going to say inventory transactions, and then this will be, or sorry, payroll transactions, and then this will either be cash receipt, cash disbursement, or inventory transactions. Okay, but it'll be one of those 3 combinations. The way that I recommend that you do this is don't start with the first page. Okay, the way that I recommend that you do this is we go to the second page and we look at all of these lists right here because we're going to have 6 items here. Here's what I want to do. I want to actually identify what is the relevant assertion that's being talked about here and whether it's relevant to purchases or cash disbursements, okay? All right. So accounting for the numeric sequence of checks. We've actually talked about numerical sequence of documents pretty thoroughly. It can test multiple assertions, but the primary assertion is usually what? Completeness, okay? If we're talking about checks, it's related to purchases or cash disbursements. Cash disbursements, okay? So make a note here, this is purchases, or sorry, this is completeness and cash disbursements. Okay. All receiving reports reported to the accounts payable department on a daily basis. You see that daily basis, what does that usually imply? When anything that relates to time usually relates to which assertion? Cut off, okay? And if we're talking about receiving reports, then we're probably talking about purchasing, okay? Not yet to the cash disbursements process. So we're going to talk about cutoff and purchasing. Daily cash disbursements report reconciled to checks and electronic payments issued. Okay. Reconciliation usually implies which assertion? VAA. Okay, VAA. Okay, and we got checks here. Checks is a big clue that we're talking about cash disbursements. Okay. So VAA cash disbursements. Purchase not recorded without approved purchase order and receiving reports. Okay. So what's going on here? We're not going to record a purchase unless we have supporting documents. Okay. Unless I have supporting documents. It's not going to go into the system unless we can find the source documents. What is that key indication of? Proper. So we don't want something recorded that doesn't exist. So this is existence, okay? Existence occurrence. And if we're talking about purchases, we're talking about the purchasing process. So existence occurrence, purchasing. Chart of accounts. Chart of accounts is going to be what assertion? So remember, chart of accounts tells us what our account name and number is and what category it falls in. What's another word for category? Classification. Classification. And by the way, this can be both. This can either be cash disbursements or purchases. Use of a disclosure checklist. So we're trying to make sure that information that should go in the financial statements does go in the financial statements. What is that going to be an example of? Presentation, and that can be both purchasing and cash disbursements. Okay. So classification, presentation, and you can actually say both here because they're applicable to both. Everybody with me so far? Now, I know that's a long and tedious process, but trust me, it makes this next step very, very easy if you go through this process, okay? So we've identified what the assertion is. We've identified what is talking about, whether it's talking about purchase transactions or cash disbursement transactions. Let's go back to our previous page, and let's go ahead and look and see what we got here. Now, we're in purchase transactions, so we're automatically going to be only associated with anything that's related to purchase transactions. We just need to identify the assertion. Purchase transactions recorded in the wrong period. So this is a time element. So anything that's related to time is going to be cut off. Okay. And we only identified one item that related to cutoff. That was number 2. So we can automatically say number 2 is going to be the control in this area. Purchase recorded, but goods are received or not, or goods or services not ordered or received. So we just talked about that. We're worried about a purchase being recorded, but it didn't actually take place. What is that a violation of? Existence occurrence, okay. We're talking about existence occurrence for purchase transactions. That was number 4, okay. That was number 4, control number 4. Now moving into cash disbursement transactions. Cash disbursement charged to the incorrect account, okay. It's the wrong account, whatever the wrong account number is. How do we know if it's in the incorrect account? What are we going to look at? What is that document called? The chart of accounts. This is a classification issue. Classification issue. So classification, use of a chart of accounts. Cash disbursements made but not recorded. Anytime something fails to get recorded, it's always going to be a violation of completeness, okay? And we know this is cash disbursements for completeness, so this is going to be number 1, because number 1 is our only one that dealt with completeness and it dealt with cash disbursements. Does everybody follow the procedure that I just went through there? Now, can you shortcut this? Can you actually try to go back and forth? That's fine, okay? I do believe that a tried and true method, if you want to get this 100% correct, is going through and identifying the assertions that are here, relevant here, and identifying the phases, okay? You do not have to follow my suggestion. I just think it's a very easy procedure to go through to make sure you get it correct. That will give you a lot more clues as to what you're looking for over here, because it's a little bit hard to try to jump back and forth between documents to try to check in each one of those. If you know what the assertions that you're dealing with here and know what phases that you're dealing here, what phase of transactions, then it's much easier to follow that process. All right, what's a substantive strategy? Provide 2 examples of accounts that use the substantive strategy for audit. Okay, Substantive strategy, when auditor is elected not to test controls as part of the audit. Instead, the audit will retain all remaining assurance from substantive procedures, hence the substantive strategy. I know I read that quickly. If you were curious what that entire wording was, you can look at the practice exam key, which is now available on Brightspace. Okay. That being said, what are some scenarios that we're going to use the substantive strategy? Generally, it's going to be accounts with low transaction activity. If you give me examples of any accounts with low transaction activity, that would be good examples. Property, plant, and equipment, investment, long-term debt, stockholders' equity. Those would all be examples of those. Those would be areas of substantive testing or substantive strategy. So then, offset is a reliance strategy. What's an example of reliance strategy? That means the auditor tends to rely on the entity's controls. Auditor plans to perform and perform test of controls and uses the test result to determine the achieved level of control risk. All right. So this is Barry Silly's area. We're saying we would like to set control risk at something level than high, a level other than high. We would like to rely on the entity's controls to get some type of assurance, hopefully to reduce the testing that we have to do in the future. What are the most likely scenarios that we're going to do reliance strategy? This is just the opposite. These are areas where we talk about accounts that have frequent transaction activity. Cash, accounts receivable, accounts payable, inventory. Okay. Those are going to be all examples of transaction areas like that. And that's not a comprehensive list, by the way, but those are some easy examples that we could pinpoint there. Is everybody clear on the distinction between those? Okay. Substantive strategy and reliance strategy are really important concepts with respect to audit. Last question. It's like I planned on this question coming up. Okay. Paying dividends to a shareholder for the year under audit. How would DOM audit dividends declared and paid if SOS uses an independent distribution agent? So before we answer this question, we just talked about this in the study guide, and I said, when you're testing dividends, you're concerned about two assertions. What are those two assertions again? Completeness and VAA, okay? So completeness and VAA. So if we're talking about completeness, and we're talking about a third party, what's the easiest way to test completeness with a third party? Confirmations, okay? We're going to send out confirmations, okay? Confirmations are going to tell us what the amount is. That's going to give us completeness. And then we can agree this amount with other documentation. Usually going to be the notes of the board of directors that will test VAA. All right. Everybody on board with that? All right. What would DOM do if the dividends are declared and paid if SOS does not use an independent dispersing agent? Does this change our assertions? Are we still concerned about completeness and VAA? Yes, we are. So what are we going to do? Well, if we have the information right there in front of us, then we just basically do very basic tests of documentation. So what's a powerful VAA test that we can do if we have all the documentation and calculation in front of us? Testing procedure. Starts with a re, but it's not reperformance. Recomputation, okay? Recomputation of the dividend authorized by the board of directors, okay? Also, if we have documentation, what's an easy way to examine documentation and test specifically for completeness? What is that called? Moves in this direction. Tracing the cash disbursements to the dividends payable. Tracing the source to what the eventual recording item was. Now, if you just said recompute and trace there, I'd probably give you credit because that's actually pretty close, okay? Again, the key there is not to actually remember each of those specific terminology, but to remember what the testing of the assertions were. All right, any other questions? We got 2 minutes. Anybody want to share their Easter stories that didn't share over email? Okay, all right. Chance to gain face back with Dr. Barnes, but I get it. Everybody's tired. Let's go. All right, see you all on Friday.